everyone, John here with Dad's Options. Today's October 10th, 2020. This is portfolio update number 9. Welcome back. If you're new to the channel, I'm trading a $25,000 portfolio. I'm taking a mechanical or a probability-based approach to trading. I hope you're all having a great weekend, but this week in the market for me sucked. I hope all you guys made money, but it wasn't good. And I'm gonna do it a little differently this week. I'm gonna tell you exactly how much money we lost this week, and then I'm gonna get into the portfolio update and kind of talk about some of the reasons why I'm not alarmed by that and what I'm doing moving forward to rectify the portfolio. The portfolio net lick is currently $24,529. That's down $471 overall and $685 since our update just a week ago. Now again, I'm not alarmed by these numbers. This is gonna happen in a mechanical trading approach, especially when you're selling premium. Sometimes the market will just not cooperate and your portfolio will be impacted. So let's get right into the portfolio update. Okay, jumping right in. So buying power effect, we have $6,500 of buying power effect, or $6,500 of capital deployed. That's about 26% of our portfolio value. So again, want to be closer to 50%. Have yet to get there in this portfolio, but hopefully this next cycle we can put a lot of capital to use and get closer to that 50%. So, and I'm just going to scroll down here and just see any positions that are really out of whack. Something that kind of sticks out here is KRE. KRE looks like it's strangle. So, and the reason why the buying power effect is high in KRE is because, and I'll open the position here. You see 39. The 39 strike is being tested. KRE's current price is $39.66. Yeah, so it's in the money. So naturally, that's going to be a little bit. That's going to increase your buying power effect as more capital is held because the likelihood of your that call being exercised or showing a bigger loss is higher. So that's okay. We'll look maybe to manage that next week if it increases any farther than $793. So everything else seems in line with kind of our profit or our target of 2% of our portfolio value. Going over here, looks like our delta is negative 32, so we finally have some negative deltas. A contributing factor to the reason why we were down this week in the portfolio, but that's okay. I'm more comfortable there. Theta is 17. That's low. We've had a lot of our undefined risks trades come off already, some of our strangles and that sort of thing. So I understand that's low. Again, that's the name of the game, just to try to increase the risk a little bit in the portfolio and see that theta number come up. The extrinsic value is okay. Again, low. Like to see that get a little higher. And then this is interesting. Our equity pop. I'm not really sure why that's jamming up there. If anybody knows, leave a comment in the comment section. Help me out on that one. All right, so here is the activity in the portfolio for the week. SLV was $56 debit. That was a winner. Made about $56 on that trade, so that was a good one. Came off pretty early in the cycle, 41 days left now, so that was a good trade. Got in and out of it fast. ES, this was our broken wing butterfly on the put side. Able to, obviously the big up moves in the market this week, I was able to roll up the 390 put all the way up to the 3100 for a risk-free butterfly now. Should ES ever get back down there? Probably never, but if it does, free butterfly, no more risk on for that. NEO, I did a, this is Similar to the SLV trade I did a little bit ago, this is basically a synthetic short put at the 21 strike. I did buy the 13 put. It was really cheap, but I bought it anyways because of the buying power restrictions there in NEO. Much more efficient way to do it than to just sell that naked 21 because it was cash secured. So I'd basically be putting up, I don't know, I think $1,900 or something like that for that trade. So, all right, next trade is Microsoft. Microsoft was our Iron Condor. Didn't hit the profit target, but was able to go ahead and take that off. And I think I made about $40 on that trade because that was an adjustment trade. I rolled down the calls, and Microsoft happened to be sitting in between the strikes, so we were able to take it off for a profit, which was great. FL and SKX both are new opening trades. Foot Locker was a $2.27 strangle, nothing special there. Buying power was right. SKX was a ratio spread on the put side ratio spread. So basically I sold 2 of the 28s, bought 1 of the 30 puts, yeah, that's just I'm looking for anything neutral move or up move. Ideally, best case scenario is it's right at the 28 strike come expiration, but we won't count on that happening. So Tesla, I was finally able to roll up the 415 put up to the 420. So now I took all the risk off in that, and I made the original credit on the trade was $2.15. So basically made 55 cents. And I have a free shot, so I can make a total of $555 if Tesla trades right at $425 come expiration. Hey, stranger things have happened. Tesla's now, hung around that 425 mark for the last couple weeks. So, it hasn't hung around there. It's traded up and traded down, but it has closed a few times right at 425. So, not out of the realm of possibility. We'll keep monitoring that, and hopefully next week I have a good update for you guys and we made some money. Boeing took this one off. I'm going to go ahead and just call this a scratch trade. I think I made about $16 on it. Boeing was a big winner for a little bit, and I just went ahead and took it off because basically it was trading at scratch, and it was a debit spread, so all the extrinsic value was really out of the trade at that point. You see 6 days to expiration, so all it would have taken was a little sell-off in Boeing, and we would have lost all this credit. So I just went ahead and closed it for a scratch. Thought that was better, and I'll kind of get it. This leads into some of my other analysis of the portfolio being down and some of my lessons learned here, but that's I would have just made that decision, took that off, and probably should have taken that off much earlier. Same with some other positions, but Apple $1.57 debit. Now that's a loser. You see 20 days to go. I put on a trade in the weeklies. I did that because Apple weeklies are liquid enough. What I didn't account for is Apple had not released their earnings date yet, and they finally did that, and it was released. And I'll just go to Apple here real quick. The trade on in the October 30 cycle here in the weeklies. They had not yet announced the October earnings date of October 29th, so that kind of hurt me. I didn't want to position leading into it that far in advance. I might still trade that for, trade an earnings trade in there, but I'm not going to do it that far in advance. So I went ahead and closed it before it became too big of a loser. So Facebook is a 25-cent debit. I was able to another one. I was able to take all the risk off the table, roll it up I rolled the 240 put up to the 245. no more risk on in that trade. And I think all my butterflies are now risk-free, so one of them's got to hit, and that will be good for the portfolio. A couple of the positions, the contributing factors to the reason why the portfolio is down so far, or down as much as it is this week. The STIX, the technology index, now that's, last week we had a winning position in here. And then if we just kind of go here to kind of see what's happening, and I'll just pull up the NASDAQ because it tracks closely with the NASDAQ. So October 5th was Monday, and so we had that down move there, but after that, I mean, we just had a crazy up move. So and I could pull up STIX directly. I mean, here was Friday. Here's a huge move up on Monday, and sometimes a move like that, over a week's time is just going to crush your portfolio. So if you have especially if you have a short assumption in the market there. So STIX was up last week. And so we have, a big $213 of this week's losses from that. CRBP is just, that's been a dog. So I won't really say this week has been, that's beating it up. But KRE, is down $100 just this week because of the, just because that call side is tested. So again, next week I'll look to kind of adjust that maybe. SPY is another one. So this is interesting. So this started off as a calendar, the short 315 put, which just rolled off last week. So this one has continued. This long 315 put has continued to get crushed. So it's not a total $908 loss. That's kind of screwed up because of all the adjustments and everything. But that one is still contributing to the loss this week. So yeah, and then VXX, that volatility got crushed overall this week. So this is a long debit spread, and again that the volatility play hasn't played out very well. So all right, everybody, so that's the update for this week. Again, we're down in the portfolio, but I'm staying the course. This is going to happen. I'm going to stick to the mechanical approach, and I'm going to keep trading those probabilities. My takeaways for this week are this. Sometimes you're going to make a lot of money, you can't get too high. Sometimes you're going to lose a lot of money, you can't get too low. The whole goal is just to level out those ups and downs. There's plenty of things I can do better in order to eliminate those up and down swings, and that's what I'm going to push forward on. Again, I thank you guys for joining me. If you're new to the channel, I appreciate you guys subscribing and clicking that bell so you're notified every time that I post one of these updates. I try to do it at least once a week. Spread the word. If you have other traders that are interested in a probability-based or mechanical approach, I look forward to sharing upcoming portfolio updates. And again, use the comment section. I want to become a better trader. I look forward to learning from different aspects that you guys bring to the table as well. I'm not going to take any more of your guys' time. Thanks for tuning in. Smash that like button. Thank you guys. Have a good rest of your weekend. See you later.